Yo guys, we are back again for another video. Something happened yesterday. I blew my account. After 63 days, I finally hit my drawdown overall and I lost the account. Did I really care? No, I did not. I instantly got another account and I traded, and the first trade was very successful. I want to give you guys an understanding of what happened this week. I only took 2 trades this week and I was on to my last trade, which obviously turned out to me losing. And that same trade, I hopped in again because it didn't actually go all the way to my stop loss because I didn't have that much capital to go to my stop loss. So in the end, I lost that account, instantly bought in again, and price was in profits. This is trading revision week something, probably 20 to 1, something like that. Pretty crazy. It's been 20 weeks already. Hopefully I continue to improve and just try to learn from my mistakes, and let's get to it. Okay guys, Thursday was the first trade that I took for this week. The reason why is just because the past few days weren't looking too great. And the reason why I actually took a buy in this situation is because it was lining up with the higher time frame, which we're going to go and see why. So if I was to zoom out here, price was at this point right now. Right, so you can clearly see that this huge retracement could potentially be a continuation for price to continue to move up. And that's what I had in mind at the time. So when you can see here from the previous, the start of the uptrend, you can clearly see from this little move, price came down for a little bit. For this bigger move, price came down for a bigger bit. So just the retracement kept getting deeper before the continuation happened. So for this case, I've learned that each retracement in a trend, it actually gets deeper. That's what I could potentially see from the past 3 movements in the higher time frame. So from this, the reason why I was actually so inclined on actually taking a buy here is because you can clearly see here, the start of the month, the 1st of August, price was actually congesting and then it broke through. And you can clearly see the congesting part is phase 1. Phase 2 is when price manipulated, came down one way, and it didn't just come down 20%. It came down 80% overall. But when I took a buy, it was at 60%. So usually price doesn't even go down to 60%. Usually if it goes past 30%, I would consider it to be a better opportunity to get more profits out of one trade due to the fact that price deviated that much. So when price deviated this much, it was in the right time at 610. Took a buy. Price wasn't making the movement I liked, but I just held it still. And you can clearly see I got faked out. What I still haven't realized from my previous mistakes was that price always shows you what it's going to do before the move happens. So in this case, guys, you can clearly see here, price faked out. Here, price faked out. Here, there was no special. Just another area where price faked out. So if I was to be more patient, and at least to take a buy in this sort of area or in this sort of area, then I would have obviously still been in the green. So from that, guys, my first trade was just a failure, but it's just a lesson to learn, because what I could have done is I could have saved myself at least 3 pips just by putting my stop loss just below here. The reason why I even had my stop loss at 10.5 pips or 10.4 pips is because there was another 4-hour liquidity. You can clearly see this purple line right here is the 4-hour liquidity. The reason why I have my stop loss below it, because price actually didn't grab it and it rejected off that area before touching it, or at least going through it and coming back up. So for this, I had my stop loss at a 10.5 pip stop loss, and you can clearly see price actually came down on one of the 5-minute candles, came down, rejected it, and that could have validated me to actually bring my stop loss up just below it, so that if price decides to break through, which it did, that I save more than lose more. So that was a lesson that I still haven't learned from if I was to take one of these trades, which it clearly showed that price faking out throughout the day. And yeah, probably just to hold more, wait longer, or just wait for a better opportunity where there is better timing, which it was in this time, if that makes sense. So going from the second trade was just a forward test. The reason why I took this forward test and the reason why I thought price was going to bounce off from here, like I said, guys, it literally deviated 80%. It needed to come back at least halfway, which I was expecting price to come here, which it did. You can clearly see I do still expect price to push up to the daily open. The daily open, which the daily open is currently red because it's the first day of the month of August. And if you guys don't know how my strategy works, I don't have a take profit. I usually take profit at certain areas when price does a certain exit strategy. So in this case, I was planning on holding this forever, guys, honestly. And usually in New York, during the whole week besides Friday, I sleep in. I don't sleep in, I sleep earlier, so I'm not actually up for New York. So in this one, guys, I took a buy just before New York on my forward test. You clearly see price instantly started shooting up. The reason why I wasn't too confident in this trade and I switched it from a normal trade to a forward test is because it just didn't look how I would like it to look. So price clearly grabbed all of these 4-hour liquidities, 1-hour liquidities, and I was waiting for price to at least touch the monthly open price. What I did not realize, which I knew, is that price doesn't always touch the monthly open price to still use the monthly open price as a confluence. What do I mean by that? It just has to be close enough to be considered a part of the monthly open price confluence, if that makes sense. And on top of that, price also grabbed the liquidity from before. This kind of made a bit more sense because it was coming closer to New York, and New York usually grabs the previous liquidity before pushing up, and that's what it did just then. But I was expecting at least for price to come all the way down to the monthly open price to touch it. What I didn't realize is that price doesn't always have to touch the monthly open price to be valid, to be a part of it, if that makes sense. So I was expecting price to come back up. I just didn't know necessarily when, which I did expect price to push up at the monthly open price, but I just waited for it to touch it. I was trying to follow my strategy, you guys get the point. You guys get the point that I was waiting for a more confirmed confluence of the price action touching the monthly open. So what happened is obviously price rejected, and during New York, price continued to push up. And if I was to essentially have taken this trade instead of a forward test, I would have still ended up at break even. What I could have done to probably improve this scenario and to get more profits out of this was really nothing. I couldn't really do anything because I wouldn't have been up during this whole trade, and I would have woken up at break even because I did not have a take profit, and I expected price to touch the monthly open price. I did say also the next day that price would price has a chance to touch the monthly open price, which it did the next day. So you can clearly see right here, guys, for the next day, I took a buy. The reason why I took a buy here is because price was not necessarily acting like it did Thursday, but it was kind of like scared of touching the monthly open price. So clearly you can see the first move that price did, price came down, grabbed the previous liquidity, and came back up before London session. And then when it was London session, price moved very hastily to grab the liquidity in London session. Perfect timing for me to take a buy to the upside. And that's what I did. So price grabbed down, price went down only 25%. And since price did a major move yesterday and it didn't touch that daily open / recent monthly open, I did expect price to come back up to at least touch the monthly open. And that's why I would have probably had my first take profit if I was to ever take out at a certain area. But in the end, obviously you can see price came up, kept pushing up, and it didn't actually make it to the monthly open. It rejected the previous monthly open that price did yesterday. And yeah, from here, guys, I just decided to put my stop loss around here because price did this major movement. And even though I could have held this trade till Monday, I do know that Friday and Monday are not the same like Wednesday and Thursday. What I mean by this is that Wednesday and Thursday to me are more relatable than Friday and Monday because it feels like they act different completely. So for this, guys, I decided to take out somewhere here. So I got a 1 to 10 on Friday. I did unfortunately lose my account here because price came down in this little bit of drawdown and took me out. I didn't have enough capital to essentially hold throughout this drawdown. So I got a new account, waited for price to come back down here to where I would usually have taken the buy before I blew my account and bought again. And you can clearly see price decided to push up. The news that came with it also supported my bias and ended up with a 1 to 10. So that's really how it worked, guys. Nothing too special. And it was just like the collectiveness, you can call it, of price pushing one way and not necessarily having a huge movement the other way, while there being news later on. So I could have definitely also earned more profits on Thursday. So I need just to understand the lessons that I needed to learn today was just to take that second trade and possibly figure out how to trail a stop loss while I sleep. Because for this, I could have probably traded my stop loss or made it so that if price hits a certain, like if the price goes to a 1 to 3, I put my stop loss at a 1 to 1. If that makes sense, guys. So lessons to learn for this is to take the best probabilities, trust your bias, obviously learn from your mistakes, but that's not really a lesson that I've learned from here. Cut my stop loss at liquidity grabs, and really consider price action when close to the monthly open price to touching the monthly open price, if that makes sense. If you guys understood this video, I hope you guys hit that like and subscribe, because that's really all what happened this week. It was a very profitable week. Funny enough, didn't seem like it because I lost my account, but overall it was a very profitable week. Could have definitely had more profits this week. I just needed to have more competence and understanding for the markets. So if you guys like this video, enjoy, and I'll catch you all for tomorrow. Peace.